Welcome to TMS Insights. Ben and Jeremy again here bringing you an update in May. It's been a lot going on. This April period was another positive month for the market, Ben, and we're finding it's great when we've been able to focus a bit more on the company-specific things. We've had the banks half-yearlies, and we've got a number of those March half-year companies coming up with earnings updates, while the macro budget and interest rates have been dominating all the headlines.
They have, but I think the catalyst has really been the US reporting season, which is kind of winding down now. But across the board, we have seen better than expected earnings results, particularly from their blue chips. The Nasdaq's now back in a bull market. It's more than 20% off its low. Kind of coincides with the economic backdrop. Maybe they've done their last rate hike. Market's pricing in 3 rate cuts by Christmas. Have to see if that plays out. But certainly it feels like the volatility is calming down. The fundamentals are counting again for stocks, and the fundamentals are still looking really good.
Yeah, so breaking it down a bit more. So, yes, we had a CPI read from the US last night confirming inflation is well past its peak and is coming down. And like you said, Ben, markets, whatever we think, markets are saying rates are going to come down by the end of the year. I wouldn't have that as my base case.
No.
But that is what the markets are saying. Either way, we're sort of moving that discussion on as being the big threat and the sustainable one for being a smaller one, and we can focus on the other. And then to talk about that reporting season, you mentioned Nasdaq, so think tech stocks. But what was also important in that US reporting season was how well the industrials went and how well the investment banks, which are a big part of their market.
Yeah, definitely. And look, it's that's really being driven by the US economy is proving to be much more stubborn than everyone expected it to be. They added 250,000 new net jobs last Friday, their payrolls reported. So despite what Jerome Powell's done with rates, the economy is still holding up remarkably well, and company earnings are reflecting that. And I think we're also seeing, Jeremy, that there is a bit of opportunism that happens. That I've gone through a number of these results. Companies are putting up prices, and in many cases, I think they probably don't need to be, but they feel they can get away with it, and that's me seeing margins are expanding. So number of companies, I guess, aren't wasting the crisis that we saw last year. And, here it's probably a little bit more muted. I mean, the banks, I thought, reported really good results. It was more what's coming that the market seems to be a bit more worried about.
That's right. So because most of our banks have a September year end, that's our big 3 of our big 4, CommBank being the one outside that, plus Macquarie Bank, they've just had half-year numbers. Now, what Ben's alluded to is, they were quite good overall. Not equally dispersed. The reactions in the market weren't always that great, but that's the banking shuffle. Politically, it's always unpopular for the banks to say, oh, we're having great times here, because they'll cop it from Canberra. But they did report solid numbers, Ben, at a time when things could have been different. And there's nothing there that suggests an immediate concern as well.
No, it's the first time in some years I can remember some pretty quality growth. So, sort of 10% plus growth out of most of the banks. Return on equities back in the teens. Dividend growth, we haven't seen that for a while.
No.
So NAB, I just look 76 up to 83 cents. They're going ex-div at the moment as well, by the way. So just bear that in mind when you're looking at the share prices. But, you're looking at 9% yields, including franking. And I'd say, there's a bit of concern about the margins and a more competitive banking environment, and that sort of played out as they got into the end of the half and into the new year. They've said that's continued. But overall, you'd say the numbers have actually been solid. Macquarie's was excellent, I thought.
Really good, wasn't it? And they've tended to do that. And again, the yield on Macquarie is very generous for what we expect of that company. So it looks good. And the underlying story here, Ben, is that companies are doing better than the broader economy. And this is the thing for an equity investor. We don't invest in the economy, we invest in companies. And they're tending to get a pretty decent slice of it. Moving beyond the banks, though, we also get some updates from a number of our companies, either quarterlies or half yearlies now. Ones that you've got an eye on, REA.
REA is on Friday morning, which the video will probably be coming out around that time. So that'll be interesting. It feels like we're seeing a recovery in listings volumes.
But they're going to be low for that
Still
period.
going to be low.
Yeah.
Market's front running the
But
recovery.
they know it, They know it.
Fisher & Paykel Healthcare will be out in the next week. Xero report their result. Aristocrat report their result. So we've got some results coming out from them. I would say generally the news from a company perspective has been good. And, we're then going into the end of May and start of June. We'll see companies starting to advise on how the full financial year is looking if they're not on that metric. But look, it is a bit of a strange time. Like it feels like every man and his dog has caught a recession in America. The data's just...
And the UK. And that's done better than expected as well, economically. So that was a sure thing for a recession a year ago.
We've said it till we're blue in the face. The economy is not the market and the market is not the economy. And we might well see a downturn in the economy. I would say it's looking increasingly likely it's going to be a pretty soft recession if we do see one. Because I think we are very close to the peak of the rate cycle. But as I was saying earlier, if you look at big tech, which is what really drives the US market, they're 10 blue chips, the top 10 stocks, 8 are technology companies. And if you look at them, what we have seen is that the scare they got last year saw them take a lot of cost out of their businesses and probably jettisoning some stuff that they maybe shouldn't have gone into in the first place. And you do often see this where businesses can come out in much stronger financial shape because they went through a year like last year.
Because you develop fat in the good times and you build up excess that has to be purged, really. And so it can be the cycle's healthy. It plays a role.
Facebook, listening to Zuckerberg talking, and he sort of made reference to this. At one stage, they were paying for thousands of software engineers to do nothing because they didn't want the competitors to get hold of them. So they were like, this guy's very talented. We don't have an actual job for you, but we'll pay you.
Because we don't want you going to
Google.
Google.
We don't want you going to Google. And, there's probably been a bit of a reality check. And the share prices are showing you that the recovery is well and truly underway in that part of the market.
Now, last weekend was the Berkshire Hathaway conference in Omaha. 4 years ago, you and I were there listening to Charlie and
we
Warren.
thought that might be their last one.
They're going well. It's 99 Charlie Munger and still drinking Coca-Cola and going well and full of great ideas. I had a few theories on AI and also the markets, but, positive sort of read on a lot of things from them.
Yeah, I mean, one interesting stat that came out of that for me is they own the second most amount of US Treasury bills globally. Japan is the only country or company that owns more US Treasury bills than Berkshire Hathaway. That's amazing. But it's the quotes and the comments that you get out. There's a lot of value. A lot of value.
So people are interested. We can send something around, but there is a well covered sort of audience that goes to Omaha now, and there's plenty about that. Lastly, though, Tuesday night you have a lot of fun listening to the budget. You would have
missed the budget.
Did you? Okay. Any comments from? There wasn't a lot for this takeaway this time, was there?
No. I think they got the balance right, which, my read on what Philip Lowe's, because that rate rise the week before, I've never seen a time when the markets have said there is a 100% probability of no hike, and he hiked.
Yeah.
And I think that was a little warning shot to the government. Don't go crazy with this budget because we'll keep lifting rates if you do.
Yeah.
And
they have to. That's the role of the Reserve Bank, to be the independent party. Governments are good spenders generally, and they need a central bank there to be independent. So you're right. That was a stunning sort of move the week before the budget, which did frame up a moderate budget.
Yeah.
There's still a bit of spending in the years ahead, which will be interesting, the forecast. But overall, the markets were unperturbed by the budget.
Yeah.
And it's business as usual, which is a good state for our market to be in. Not to be talking about Canberra too much, and to be
Yeah.
worrying about how do we grow profitability and shareholder wealth.
Absolutely. And, one thing I think we're all scratching our heads trying to work out where everyone's going to go, but one of the budget sort of forecasts was that there'll be over 1.5 million net people coming here over the next 5 years. So Australia is a country that is still rapidly growing, and as opposed to many other Western
And it's very hard to have a
countries.
recession when you're growing with that sort of immigration
Completely.
numbers. You're almost guaranteed not to. So
It's
a
meaningful.
good thing. It's
Yeah.
good. It's got challenges, and it can be, price pressures can build, but in certain areas like rent. But that's, again, a good thing for the economy to be growing.
Absolutely. You want to be investing in a country which, population growth has probably been one of the main keys as to why we've been the lucky country.
Correct.
Minerals and population growth.
Correct. Well positioned.
Yeah. So, that looks like that's actually going to accelerate over the next 5 years. So that's some pretty
good
good
thematic.
news.
You don't want to lose sight of that one in your investment thesis, that's for sure, Ben. Righto. Well, coming into the end of financial year, we'll be back in June for an update as well. So look forward to bringing you that next time.